is we start from larger time frames. And what do we want to see from those larger time frames? We want to see our market structure. How is our market structure behaving in larger time frames? And then when we see those larger time frames, we would want to scale down to smaller time frames. So as we can see here, um, market structure that we have here, we have a downtrend. Why? Because what you can see is we have highs and lows, which are this is a high, this is a low, 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 this is a high, and then we have another new low here, and we have another high, and we failed to break this low. I'll teach you about that. Now, what does market structure say? Market structure says, let me now share my whiteboard. What does market structure say? Market structure says, continue, kindly continue here. Market structure says, when we are in a downtrend, okay, use classic. When we are in a downtrend, we expect to have lows and highs. The highs are supposed to break the previous lows and give us new lows, give us new highs, break previous lows, like here, give us a new low. That new low must give us a new high. We must have a force that comes and breaks that low, right? Going down. So just by this, what do we know? We now know that this is a downtrend, right? So we have scenarios where we can have a low and a high, a low and a high, a low and a high. And we can actually fail to break the previous low and break the highs. Now, this generally means we have a break of structure or a change in direction, actually. Let me use these infant words first. So let me get a bit deeper now. With a low, a high, a low, a high, a low, a high, a low. Right. So we are going to have the first break of the first high or the most immediate high. This is not a break of structure. We call this a change of character. What this is basically telling you is I might just change my direction. So when you change the direction, that means from going from a downtrend, you're now switching to an uptrend. So this is a change of character. It doesn't necessarily say 100% we've changed direction. So this is the first break of the first high. And then now we have what you call a break of structure, which is a confirmation of a change of direction, which is the break of this second high. So this is as important as the first break is as important as the second break. But now what the first break just tells us is, you know what, we may just change direction. This is where traders will trade candlesticks, like even in star patterns or will trade engulfing candles, start entering in the market. So we can take this as a first entry, right? But with no strong confirmation, and the breakout structure is our second entry with a strong of confirmation. I want you to listen to this because you're going to be using this on the actual chart. So after we do a breakout structure, what we usually do is we usually retrace, right? When we retrace, that's where we start looking for things like gaps, order blocks, or we start using the fib. And now what we are also doing is now we have a new high, we have a new low. After that retracement, we have a new low, a new high, a new low, a new high, a new low, a new high. What we have done is we've changed direction of the market, right? Now, if you go back to our actual chart, which is on the V75, which I was asked to look at, in H4, what you can see is we have a high, a low, a high, and that high broke the previous low, giving us a new low. That new low gave us a new high, which broke this low here, and it gave us a new low. And that new low gave us a new high, which gave us this new low here and this new high here. Now, remember from what I was saying, the first break of the first high, we consider it as a change of character. Now, if we do this, what you can see is we've actually broken our first high and our second high is somewhere around here. Now, this is signaled as that, gents, ladies and gents, let me not skip ladies. We might just change the direction, right? There are possibilities that it can come, fail to break that high and continue, right? Meaning that our newly assumed high will be here. This is why I said the first break of the most recent high doesn't generally justify that we've changed direction. Now, what do we need to witness? We need to see this high over here get broken as a break of structure. Now we will call this a break of structure, right? The break of structure, right? Sorry, I'm using a mouse pad, right? And this is a change of character. I want you to also write this down, if you may, right? And this is a change of character or church. You just say people saying church, church, church. Some some people say church, church. No, it's church. So after this now, if we get a break of structure, what are we looking at? We need to see a new high. Right. As a trader, guys, you must be able to identify whether a high has been made or whether a low has been made. And how do you do that? Now I'm sharing information that I shouldn't be sharing. But anyways, remember we said we will do this together. So usually, what we do is if you wanna spot if our new high or our new low has been made, what I usually do, me myself, I don't know about others, I use the three candlestick rule, right? I'll also show you on the actual chart. So as we approach the area where a high is being made, I expect to see a candle, right? This is for a high, not a low. A candle like this, and another candle in the middle. It can be in the middle like this with a bigger tail. So I want you to look at the position of these tails with a tail here, with a tail here. And the third tail, for me, my third tail must be lower than the middle candle like this. So anyway, this justifies to me that you know what, we've made a low. This is not the only way we've made a high. This is not the only way you can tell whether you've made a high or a low. We actually have a whole topic on that. But just because our session is timed, I'll say it in the easiest way that I can. Now, after seeing this, after seeing that I've made a high, let me get a bit deeper now. We have candle structures like evening stars. An evening star can look like this, right? An evening star. It can look like this. It can look like this, right? Now, basically, if we use that same three candlestick rule, one, two, three, you see that the middle candle is the most outstanding one. And if this was an evening star, what do you know about evening stars? If we have an completed evening star formation, we start going down, right? And then that's it. So now, if we come here, let me come back to the chart actually, which we are using. Where is my screen? If we come here, what we would actually want to see is, oh, now I don't know where that is to went. What we'd actually want to see is a break of this high. We already have a church. Once we have a break of that high, we need to see another new high formation using the method that I just taught you, three candlestick rule. And we start introducing things like the fib. We start searching for things like order blocks. Like here, there's someone who's writing on the whiteboard. Please don't do that. You risk being. Samson say, please do not write on the whiteboard. Please, please. Samson. don't do that. Okay, so okay, let me go choose my two. So like we said, change of character, record structure. What we want to see here is we want to see a new eye. Once we witness that eye, here you can see that we have our order blocks. We can start using areas like order blocks or like gapes. We have a gap here. Let me use a different color so that you can see. We have a gap here, right? Once we see that we have a gap and an order block, what do we also want to do? We want to use things like our fib. We position our fib, right? So what I'm looking forward is I'm looking forward for V75 to give me a buy that at least tries to come and break. If it breaks, now we are fully confident that we have to wait for it to retrace and then we continue with it with our new market structure. Or if it doesn't, I expect it to come and hey, there's someone who's writing on the whiteboard. Please, guys, don't do that. I'll remove you from the session. I'll remove you from the session if you continue writing on the whiteboard. Please don't do that. So now that we have a high, we have our anticipated high breaking area here. We would want to go back to smaller time frames. Now let's go to H1. Right. So remember, as much as H4 is a ruling market structure, H1 can also give us its own market structure. Right. What do I mean by that? We have areas in H1 that are going to be reactive, like which OB broke this structure over here. We can see that we have an OB, this OB over here, this one that I'm just marking. Right. So when, hey, sorry guys, nisina so gonna kushandisa mousepad yangu, but let me use a tool that we can all understand. Which two can be good at that? Okay, like this one. So once we see that we have an OB over here, we expect, obviously, we are expecting price to buy in the long run. But now, when we get to these reactive areas, we expect some bit of, let me do this, some bit of reaction, right? So if it reacts at this area, which areas can it most probably sell to? It can most probably sell to these areas of previous highs, and then it gathers momentum and buys. So these are also things to consider. When you buy or when you sell a trade, you should be able to know where it's going to react and why it's going to react at those certain areas, right? What this helps you is you can be in a trade that you can obviously see that this thing is buying, but you know that you can buy at the wrong spot. You can actually have a wrong entry and it will still buy. And then you'll be like, "Ah, I saw this analysis was great. I saw a buy, but when I bought it, it didn't buy. Why? Because they are also not considering reactive areas and why they react. Now, that gets me to a topic of order blocks. I want to just share some light on it, but still we are working on V75 like I was assigned to. At the end of this session, we're going to come up with one clear answer that we can actually use in the days to follow, if you actually follow, right? So what is an order block? An order block is a last buy before you sell candle, or a last sell before you buy candle. What I'll do is I'll come back again to my whiteboard and I'll do this. Let me remove that. Let me clear the page. Okay. So let's use our market structure rules. So we have, like I said, in this example, let me give an example of an uptrend with a high, a low, a high, a low, a high, a low. So, like I'm saying, what is an order block? An order block is a last buy before you sell candle or a last sell before you buy candle. Now, what you can see is, okay, let me remove this person from this session. The Someone was just writing on this whiteboard. But that's why I limited the numbers, guys. So yeah, let me remove the person who's writing on the whiteboard. Okay, Martin, I'll get back to you. I can see you're raising your hand. All right. So like I said, we have a last buy before you sell candle and a last sell before you buy. Did I say that right? Please start up guys. So what does this mean? This means if we're in an uptrend, we can have a high and a low. I want to teach you the easiest way. Before we start continuing with that market structure, we have a last sale at this point here. Before we start buying, let me use a different color for the buy because some people won't understand, right? And then what do we see? We see that we continue with that buy, right? This last sale before you buy, if you mark it, it will give you a zone, right? And using the most easiest terms that I can, your trade will most likely sell back to that area without breaking the low, which is this one, right? And then it continues going up. Why? Because orders were injected at that area. Right. Um, Let me repeat again. Right. I'll add more terms. Sorry, guys. I don't know if I'm a good teacher or a bad one, but I'm hoping what I'm saying, you understand it. There's someone called Samso. Say he keeps on writing on my whiteboard. So for us to be okay, let me just remove him from the session, which I hate to do. Because the person keeps on writing on a whiteboard. Right. So let me repeat it again. What I said, when we buy, we make a new high, right? When we sell, we make a new low. Now, from this low, what we need is, we need, if I can say, strength that can buy from this area, pushing and breaking this high so that we get a new high, right? After we get that high, right, obviously we're gonna retrace, make a new low. When we make that new low, again, what do we need? We need strength to pump price so that it comes and breaks the new high. So an order block now, we can take it as a candle that institutes use how they buy, we sell, they put money in that candle, right? Why? So that it moves the market to go up. I don't want to repeat this theory, but for the sake of others, let me just do it. I know we have newcomers. I think I've been repeating this theory again and again and again. So What happens, guys? Let me do it properly. When we make a new low, what we are hoping to do is we are hoping to buy with a force. We are hoping to pump price, right? So let's take this area as an area where we are making a new low. So what does an institute do? They put 20 million in this candle, which is our last sell, right? When they put 20 million in that candle, what they're basically doing is they're selling it. That's why it's a last sale before you buy. Now, what they then do again is the next candle that follows, they put 50 million on it, right? So this 20 million is now in loss, right? But this 50 million is now getting in profit because price was pumped, the market moves, right? But remember, this 20 million is now in loss. By the time we get here, this 50 million maybe is 200 million profit plus, and but this 20 million maybe is now minus 70 million, right? So just because we cannot close with a loss, we have to come back to that area, right? What they do is they come back to these areas. They can either inject imwe apa or they pull out other positions, right? And then the market retraces. When it retraces, this 20 million now comes back. This whole loss, this whole 17 million loss now comes back to break even. It's either they close at break even or little profits, right? Now, they don't have to come and break. Remember, this area is also acting as our low, right? So they don't have to come and break that low. What do? They continue. Now, what is your market structure going to look like? High, low, high, low, high, low. So what you're going to see is you're going to have order blocks here, 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 you're going to have order blocks here. Right. But the order block theory now again in practical, it's a very huge topic on its own. Like, I think on another session, I would have to tell you that you have to use this order block, you have to skip this order block, all that you have to know as a trader, right? But anyways, the main reason I was teaching you about this is now what we do know is, let me share my screen. Now what we do know is when we come to these areas, remember we are working and teaching everything based from what we are seeing on V75. Now what you do have to know is when we now come back to these areas, these are all Bs, right? And prices to react to those areas. These are all Bs, right? Let me mark them here, and prices to come and react on those areas before we break that high, right? So my assumption would be based from what we are seeing on V75 to buy to this area. Since we have another OB at this high, this won't be as reactive as much as we are going to see here, right? It react, break that high, and then when we break that high, what do we know? We know that we've changed our direction. What do we have to do again? Start now working with order blocks that broke the structure over here, right? Which we most likely can get at these areas, right? And then our trade will retrace back and then it will follow market structure and go up. So for V75, based from what we are seeing, I'm expecting for V75 to come. Let me do this. I'm expecting V75 to come and buy, react on this area, react on this area again. Why? Because we have OBs in these areas, right? And then when it reacts in those areas, if it fails to break, obviously, what do we know? We are going to sell, right? But we don't just sell. We only sell when our market structure in lower time frames now plays. And how does it play? Break off structure. So let's say this thing is not going to break. What you are going to see is, for example, we are in M15, right? And for that M15, what do we see? we see that with a high, a low, and then assumingly we are making another new high and another new low. And as we approach those areas, our price is going to get too tight, high, low, high. Now, if you are not going to break this high, what we expect is we expect our change of character first and our break of structure second. And then in that M15, we start selling. This is in the event that we are now not selling and it fails to break that high from our H4, right? But if it breaks, this is what it's going to do. Godfrey, please don't write on the whiteboard. So if we have people who've done BTMM before, we know that we have a peak, right? Level 1, right? Level 2, right? And let me do this so that we see. I have so much information to share, guys, but sometimes I think it's time and both our availability as well. So let me do this. So for those that do BTMM, we know that we have our peak, our level 1, which is here, right? And then our level 2, most probably, which will be created here, and our level 3, and then our peak again, and then our sell, right? So if we are going to break this high, we are supposed to be having 2 levels down, this high, and 1 level up. That I feel like I'm not sharing information that some of you don't understand. So I'll do it as a separate lesson, but just because I mentioned it, you should also go and research a bit about it, right? Just a second. I want to look at the other pair. Okay. So there's another pair that I was given, which is V50S. We are done with this one, right? I hope you are convinced with what I said about this one. If you have any questions, feel free even to just send me a WhatsApp right now if you think you didn't understand or I missed something so that I come back to it before the session ends. I think we have around 6 minutes left, 4 minutes, but anyways, it's fine. We'll do V50S quick. Okay, which one is this one? Volatility 51S. So from our H4, based from what we learned, what do you see? We see that we've been in an uptrend, and us being in an uptrend, if we come to D1, let me check something on D1. D1 is just making noise. And if we go to this zoom level, it has just been on one position. Why do I say it has been on one position? We have high at this high, which hasn't been broken. And we have this low as well, which hasn't been broken. Right. But looking from this low, we can see that we have another low that stepped up. So meaning we can expect our V50S to give us another, this is from G1, guys. We can expect it to give us another low, which fails to break this low over here, and then a high, right? But let's go back to H4 and deal with it from H4 in a way that we all understand. But I understand we are all understanding what I'm saying. So now what we see from this H4 is we had a, let's go together. We have a high, a low, a high, a low, right? A high, a low, a high, a low, and a high that attempted to break this high. I can't call this a full break. So now we have a low, right? So basically we have our first change of character. And what we are looking forward second is we are looking forward to have our breakout structure. When we break this area here, Now we know we have a breakout structure and our structure is shifted, right? So let's go to H1. Let's see what market structure we're getting in H1. Right. So from H4, we've anticipated a sell currently, right? From H4. So let's go to H1. Where is our H1? Our H1 is here. Now, what you see in our H1 is let's start by doing this. This is your foundation, guys, of everything with a high, a low, a high, a low, right? So we are in a bit of an uptrend, a high, right? This high failed to break this high. I think we can all see it. This was just a rejection here. So now we have a low. This low here, right? So this is our first change of character. Now we have a let me do this so that we understand. Right. Now we move to M15, sorry. M15. Sorry, I'm not talking fast because of our time. Now what you see in our M15 is we see that we have a high, a low, a high, a low, a high, a low, a high, a change of character here, in the break of structure here. So now our M15 is selling. Right. So that means the sale we are seeing in our H4 is aligned with our M15. It is aligned with our H1. Right. So what do we need to do at this point? Now we know that we are targeting this previous low. So what's the first thing we do? We start looking for entries in that M15 that can lead us somewhere. So what we need to do right now is, firstly, we had an order block here, it was respected. We had another one in M15 here, it was respected. So at this point, we just sell it and we go with the flow. Right. So for us to be fully confident, let's move again to M5. This is how we just mark everything up, guys. Let's go to M5. Hey, we have less than a minute remaining. Our sessions are timed. But if we go to M5, what you see, we have our own market structure in M5. You can see our M5 at some point was buying, selling, making noise, buying and selling, but it's more leaning towards the sell side. So what we need to do